Hey guys, it's Jen. If you're buying a home or refinancing, you probably thought, I'm going to call 3 different mortgage lenders and go with whoever has the lowest rate. Smart move, but only if you compare them correctly. Today, I'm going to show you exactly how to compare mortgage offers so that you don't get tricked by numbers that look good but actually cost you more. So before you even look at interest rates, you need to ask yourself, all the lenders quoting the same information. So is the loan program the same? Conventional, FHA, VA? Is the term the same? 30 years, 15 years, 10 years? Is the down payment the same? 3%, 3.5%, 5%, 10%, 20%? Do they have the exact same occupancy? So are they showing that this is a primary residence for you or an investment property? So for an example, a 30-year conventional loan will price differently than an FHA loan. An investment property rate is higher than a primary residence interest rate. If one lender quotes 6.5% and another quotes 6.75%, but one is FHA and one is conventional, it's not apples to apples. So first step is you need to make sure that you have identical loan structures. Step 2 is looking at that loan estimate. So every lender is required to provide a loan estimate within 3 business days of your official application. So not within 3 days of getting pre-approved, but 3 days of you actually making application, which means you have made a purchase offer. The seller has agreed to sell the house to you. Everybody has agreed on price and you are moving forward and you need to make a mortgage application. So once that part happens, then lenders are required to give you that loan estimate. I actually think that people should shop for their lender before they get to the point of really having a home, or at least narrow it down to 1 or 2 people prior to going under contract. And so what can you ask for if a loan estimate isn't available because you really don't have a property that you're purchasing yet? Ask for a loan worksheet. So all lenders should be able to give some sort of loan worksheet that details out all the fees, whether you're paying points for an interest rate, what the lender fees are, etc. Now, all of us lenders are doing an educated guess on the title fees, and we're really not in control of that. So I'll tell you here later on in the video the things that you do want to look for. So if the title fees are super cheap with one lender than it is another lender, us lenders really are not in control of title. So that might not be super relevant. So when you're looking at these worksheets, don't just look at the interest rate and the monthly payment. Here's what you want to look at. Discount points. Is the lower interest rate coming from money up front? So a lot of us lenders quote interest rates with points. So a lender A could have told you 6.5% interest with $4,000 in points. Lender B could say 6.75% with 0 points. Which one is better? It depends on your long-term goals. And this is why you need a lender that can break it down and tell you, if you pay $4,000 up front and you save 0.25% interest, how long is it going to take you to recover that money? I break that down for my people. So if your goal is to have this house for 2 years and then get rid of it, might not be worth paying points, might be better off taking the higher interest rate. Depends on what your goals are. So what you want to compare when you're looking at these loan worksheets is not just the interest rate, but you want to compare what's lender A and lender B's underwriting fees. What are their processing fees? Do they have admin fees? Do they have fees to lock your rate? So those are the fees that lenders can 100% quote accurately for themselves because they're their own fees. Title work fees, us lenders are using a third party to pull title fees that are accurate or fairly accurate, but I could go pull a title company that has rock bottom fees, and then the seller could choose a different title company for you to use to close your loan, and then you would be way off. So I say, look at those fees that have to do with the actual lender. Underwriting fees, processing fees, all of those things. So the next thing you want to look at is the APR. So APR stands for annual percentage rate. It factors in the interest rate, the points, and some fees. Okay, so here's the catch with APR. So APR is assuming that you're keeping that loan for 30 years. Most people don't keep the loans for 30 years. Most people move within 5 to 7 years. So APR is helpful because it does give you a side-by-side comparison, including the rate plus fees. So it is helpful. So when you're talking to lenders and you're looking at interest rates with them, they've taken a pre-approval application and you're talking about interest rates, you want to ask, how long is the rate lock for? 30 days, 10 days? Because that matters. Is there a fee? If they only lock you in for 10 days and your loan doesn't close, is there an additional fee for that? What does the lender do to help make sure that your loan gets closed in the amount of time that they have locked the loan? So just remember, the cheapest lender doesn't always help you to close on time. So in competitive markets, speed matters just as much as pricing. So here's something else that you need to think about, especially when you're shopping interest rates. Can 0.25% rate make that big of a difference on your loan? I can show you the math. Times $5 more a month is worth it when you have a lender that will pick up your phone call, that will answer your text messages, that doesn't shuffle you to 3 or 4 other people, or you don't have to call an 800 number. For a lender who understands how you get paid. Are you 1099 paid? Are you self-employed? Are you an investor? Do the lenders have multiple loan programs? Here at Cross Country Mortgage, I have 120 plus loan programs to put people into. So just remember that if you don't have options, you don't know this. So these are things that you want to ask lenders up front. So the best deal of a mortgage person when you're shopping for mortgages, mortgage interest rates. So the best deal is a combination of these things. Competitive pricing, because you do want them to be competitive. Correct loan structure, reliable closing, and very clear communications. So if you're comparing lenders right now and what a true apples to apples breakdown, send me your loan worksheets. I would be happy to do a pre-approval for you and review what you have going on. Remember, I'm Jennifer Fanning with Cross Country Mortgage. I'm your biggest fan, and I'm here to help you make good mortgage decisions.